one-fifth, one-sixth of what the Germans get are not as productive. So productivity of capital, productivity of labor is very important. And we are possibly 40–50% of what China's productivity is. And for that, we must use more and more automation and technology, which is happening in this country on a large scale. Then we must increase the productivity of capital. I was speaking to Shireen and pointing out one big challenge which we have to face as a country, which I don't see any debate in this country, in the financial press otherwise, and that is, what is the weighted average cost of capital for all countries above $4 trillion in GDP? United States, 32 trillion, China is 20 trillion, Japan is about 4.5 or 4.3 depending upon the currency, Germany is about 4.5, India is about 4, and the UK is maybe 3.5, and France maybe 3 or 3.25. For all of them, the weighted average cost of capital is about 6 to 9%. For India, it's 12 to 14%. Can we grow to $10 trillion with a weighted average cost of capital of 12 to 14%? We cannot. Because if capital has to earn that kind of returns, it has to be paid by consumers. It has to be paid by ordinary people, and they have to earn that much. And that means more share of the national wealth and value added goes to capital, which just cannot work. Because consumers have to get money to spend and grow the economy, because 70% of the economy is consumption. So we have to bring down the weighted average cost of capital, and for that, the GSEC 10% rate should possibly come to 5 to 5.25%. It depends on inflation, which is now 3%. And we must make sure the RBI manages the yield curve better. The short end of the stick cannot be 6.2% and the long end 6.89%. We got to bring it down to about 4 to 4.5% or maybe 3% or 3.5%, with the long end going to about 5.5%. That will reduce it by 1%. Then we got to bring down the India risk premium. The India risk premium is about 4 to 5%. It's very important to understand why the India risk premium is high. And the India risk premium is high primarily because there is no confidence about policy stability in this country. The income tax department and many parts of the government routinely change the law and policy retrospective effect, and therefore people demand a higher premium as risk, and that has to come down. Jaitley did it, our former finance minister Jaitley did it by grandfathering the change in the capital gains tax when he changed it, and I think we ought to do that. The recent instance when our finance minister changed the indexation rule for capital gains was very wrong because it was a retrospective effect. I think Maruti lost about 800 crores because of the loss of the indexation benefit. We've got to be very careful and understand because it impacts investors' confidence. And we've got to make sure that our contract laws and court judgments are in tune with what investors want, because investors are investing capital, and if they have more risk, they demand more. So we've got to bring it down, and we've got to bring down the volatility in the market, which will come with a much deeper liquid markets, which is happening in this country in a substantial way. And the next thing is, we got to make sure that we use all technology that comes in. We are in the age of AI. India is the third largest digital power in the world, 167,000 startups, about 220 unicorns till yesterday evening, maybe at 9 o'clock, I don't know today. We got to see what happened today. I'm sure Shireen will tell us. And they've created $600 billion of value. And we have about $120 billion of value in the public markets right now, up and down. And I do believe in the next 2 or 3 years, it could go to 1.5 trillion with 250 unicorns, provided we get money. The biggest challenge about innovation and startups in this country is the lack of investment. We invested $160 billion from 2015 to about 2025. China, $835 billion. United States, $2.35 trillion. When Mr. Piyush Goyal spoke about the lack of deep tech startups in this country, some of us told us and said, show the money. Where is the capital? Bangalore is the center of deep tech startups. You have startups in very fundamental areas of technology, deep tech, but they need capital to be there for a long period of time. Why is it we don't have an LLM? We could have the talent, we don't have capital. An LLM required $15, $20, $30 billion. And now ChatGPT is raising $30, $40 billion at $500 billion. Look at the money pouring in the United States in AI. Where is the money pouring into India? And the money is not pouring into India because the policy framework do not allow such investment. The insurance companies have an AUM of 80 lakh crores. How much money have they put in technology and startups? Not much because of IRDA policies. I spoke to Sanjeev Sanyal and said, you must change. How much money have endowments and universities put in? Zero, because the investment policies of the finance ministry don't allow them to invest even 10% of the corpus. What about the pension funds? We got 40 lakh crores of pension funds, but in the MPS and the PF, they're not invested a single penny in startups or ETFs or fund of funds. So we got to ease the process. Today, India spends 9 lakh crores in subsidies, center and state. Why can't we spend 50, 60,000 crores on deep techs and others to accelerate, because we can improve that? Take the UPI, for instance. Because of UPI, today the currency in circulation has come down from 14.5% of GDP 3 years ago to about 11.5%. It's about 3% less in the last 3 years. And that means instead of people holding currency, the money is going into financial assets, into circulation, increasing the velocity of investment and reducing the cost of capital. So we got to make sure that more funding comes in and others. And the next thing is we got to expand our exports. No country has expanded, has grown in the economy without expanding its export. Look at the US in the late 20th century, or the late 19th century and the early part of the 20th century. China just now, after joining WTO for the last 25 years, or the Middle East, or the Southeastern countries, or any other country. We got to expand, and we have to increase the share of goods. We have about $485 billion of goods export. But the good news is our service export is growing in near double digits. We have a service export of $385 billion. We have a surplus on service exports of $215 billion, driven by software of $235 billion gross, $165 billion cash coming in, remittances of $125 billion. We have a $280 billion deficit in goods. And that is a big thing that we're not able to breach, and that's why it impacts the rupee-dollar rate. And the $15 billion surplus in services will increase this year and the next year because the oil prices have come down, and that could lower the gap. And when service export grows to meet the gap in our goods export-import, then possible rupee will remain stable. And the rupee doesn't depreciate, then I think we became a much more competitive economy, along with reducing the weighted average cost of capital. And I think we need to do that. Then we got to promote entrepreneurship. We need Shireen to come to Bangalore more and more, talk to startups, showcase them, make heroes out of them, like Nitin is here, a very big hero for all young people, very successful entrepreneur, totally bootstrapped, and a great guy. We need more heroes like that. We're going to create giant enterprises, invest more. I don't want Nitin to take a backseat and retire right now counting the cash that he's got in the bank. He has to invest much more and grow the economy, because we need a new generation of leaders to take India forward for the next 15, 20 years, Shireen. You've got to spend more time here, encourage them, because the earlier set of leaders who grew the economy after the 90s, when you opened up, are now on the way out. We need new faces, fresh energy, because this is the age of the industrial revolution, and that is what we need to do to make sure that entrepreneurship becomes the de facto aspiration for younger people, and we become a nation of entrepreneurs, a nation of global traders that we were when we became very, very rich. And we also need to interact much more with government. There's a knowledge asymmetry between the private sector and the government. I do wish the Prime Minister will ask every minister in the Union Cabinet to have a set of 4 or 5 people to advise them on what is happening and what needs to be done, because the gap between in business and government is very, very wide. We have a set of consultants driving government, bureaucrats, which has to go because they need actual users to talk to them and advise them. It's up to them to take a decision, because the gap in the knowledge asymmetry has to come down, because the issues for us are very clear. How do you create enough high-quality jobs for our people? How do you make sure that we can grow investment in a very productive way? How can you make sure that we create dominating positions in various industries? How to create a large export industry by reducing the cost of production in this country? The cost of supply chain, which is 12-13%, should come down to 8%. And all that is very important. And lastly, we have to create high-quality jobs. We used to produce 2.5 crore babies for the last 30 years, but the last 2 years come to 2.3 crores. The fertility for the whole country is 2.0 2 years ago. For the whole of the South is 1.7. And Tamil Nadu's population could shrink by 2035. The biggest challenge humanity has today is not climate change, despite it becoming very glamorous to talk about climate change. The biggest challenge for humanity is an aging, shrinking population. 25% of the world's population is shrinking. China's population of 1.4 billion could shrink to 575 million by 2100. Japan, 122, is losing 1 million people a year, could shrink to 97 million by 2050 and 67 million by 2100. And India's population of 1.4 billion could shrink to 900 million by 2100. 25% of the world is seeing a shrinking, aging population. Median age in Europe is 47 years. Japan is 47 years. India is about 29 or 31. China is about 36. and the United States is about 37. And that is the big challenge. When you don't have enough young people, people live longer, that means more money will go to sustain older people without younger people working for it in countries where you pay pension as you earn. And that's the challenge. So we have to create high-quality jobs. We create about 1.6 crore jobs every year, based on formal data of the EPFO for the last many years, but 80% of jobs pay less than 20,000 rupees a month. We've got to have 80% pay more than 50,000 rupees a month at the minimum, and for that, we have to make sure that they become more productive, the market expands, the cost of capital comes down, and productivity rises. Because it's only productivity that can give people higher income. And for productivity to come, we have to invest in urban India. The biggest tragedy of India is people think India is a land of villages. We are not. 45%, 50% of India is urban or semi-urban today, and political power resides in rural India because it is based upon the urban population of 1991 census. With the new census, we're going to see a political realignment where more representatives come from urban areas, and when they come up, we're going to have more investment in urban areas. Urban areas are concentration of human activity. Concentration of human activity increase specialization. Specialization increase productivity and higher income, and that's what brings in prosperity. Prosperity will never come in villages. Will come from urban areas. That's the history of the world, and we cannot do something against the history of the world. There's no romance in villages. It's not a very good quality of life that you can do in villages. 600,000 villages, out of which 15-20% have been abandoned by people. 70% of farmers' children don't want to go into farming. They want to join software or in technology. So I want to end by saying, we are on a great wicket. We are going to build this country to 10 trillion with the 85-90% probability by 2035. We are investing adequately. We are midst of the digital revolution. We have young entrepreneurs coming up. Country is becoming efficient, and entrepreneurship is going up, and corporate profitability is at an all-time high, and that's going to continue. We have to work 70, 100 hours or whatever you want, Shirin. I can argue with you on that. But I want to say emphatically, we have a great future. Go for it, and we'll all do well. Thank you very much.
Thank you, Mr. Pai, for outlining what it will take to grow from $4 trillion to $10 trillion and what role business must play. Moving on, at a time when speed, trust, and integration define the future of finance, our next conversation brings us to a space where institutional depth meets the startup drive to build fast and at scale. Steering this change is its leader, who spent the past year creating room for partnership, velocity, and shared vision across India's fast-moving ecosystem. Please join me in welcoming P.D. Singh, CEO, Standard Chartered India and South Asia, for a conversation on startup scale and the future of collaboration. I request Shireen Bhan, Managing Editor, CNBC TV 18, to kindly join us on stage to take this conversation forward.
Well, good evening, ladies and gentlemen. What a pleasure it is to be back here in Bengaluru. And Mr. Pai, I'm here quite often. I was here last week, and it is one of my favorite cities in the whole world. And the reason for that is because it does have that indescribable entrepreneurial energy. It does have the creative destruction that defines a hub of innovation and entrepreneurship, and that's what truly drives me. You know, it's very hard to follow Mohandas Pai because he does such a great job of setting the context of and laying out the numbers. I'm only going to quibble on one number, Mr. Pai. The rupee is closer to 88 today. So that's the only thing that I'm going to quibble on. And the cost of